Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Silver in the green. Have we found silver's bottom, and are prices going to start rising, correcting towards gold? Right now we see gold in the red, but silver is in the green. Gold sitting at $1,478, down $13.42 on the day, but silver is up 30 cents at $12.24. So with that said, the best way to tell which metal's outperforming the other is looking at the gold to silver ratio. And right now, this ratio is normalizing back down. Yesterday was at 123 to 1. Now it's down 2.08%, or down 2.53 points to 121 to 1, which means silver is finally outperforming gold. I do have an article from Seeking Alpha talking about Goldman Sachs' bullish price forecast, which harmonizes with the guy that wrote this article, Cliff Droke. But also, despite recent panic, gold is outperforming crude oil and equities, and gold demand should resume after its recent selling panic. So, with that said, make sure to smash the like button. Let's see if this video can get 100 likes. Everyone like that video. Like these videos. Make sure you subscribe, because I do post daily videos, and I will definitely update you on a day-to-day basis what's going on in the world of precious metals. So anyways, let's jump into this article. So, gold wasn't completely immune to the recent financial market sell-offs, yet its relative performance versus other major asset classes remains impressive. See, what's more, there are enough signs that safe haven demand for the metal is strong enough to warrant significantly higher prices in months in the wake of the pandemic-related global economic worries. After a brief bout panic of selling, gold prices are attempting to stabilize this week as the equity market struggles to discount its effects of the COVID-19. The front month gold futures price hit the $1,450 level intraday on March 16th, its lowest price since last November. The $1,450 level is widely regarded by technicians as a benchmark support level for the metal. So the latest successful test of this support can be regarded with relief, since the level remains unbroken to date. So what's more, gold recovered above the psychologically significant 200 daily moving average on March 17th, after a briefly dipping low below this widely watched trend line earlier in the week. So only once in the last year has gold fallen below the 200 daily moving average, and it hasn't done so on a weekly closing basis since 2018. So, one second. So, basically, the gold bull market that was launched in late 2018 has been confirmed by the 200 daily moving average, or the 200-day trend line, throughout its journey. And as long as it remains intact on a weekly closing basis, I regard gold's dominant intermediate term 3 to 6 month trend as being controlled by the bulls. So, he's mentioning a lot of stuff right now, mainly showing where gold could be headed. So more importantly, gold continues to enjoy a decisive relative strength advantage over virtually all other commodities right now. As I've emphasized in the past reports, gold's relative performance versus stocks, bonds, and inflation-sensitive commodities like crude oil is of paramount importance, since asset managers typically consider these factors before making capital allocation decisions involving gold. So you need to remember gold's true value. Gold's true value compared to other things. Gold is not pegged to the dollar, so when you're talking about something that has potential going against the dollar, it's a perfect alternative. So the first consideration when evaluating gold's technical position is how well its performance compared to the broad U.S. stock market is. Shown here is the gold prices versus the S&P 500 index ratio. It's clear from this that gold is massively outperforming versus equities. While it may seem unimportant to some, this is a big feather in gold's cap, since it makes gold virtually the only game in town from the perspective of defense-minded investors, aside from sovereign bonds. So they're saying this is the only investment that you could even consider looking at if you're trying to make any type of rational decision making or investing. So it's a good point. You know, gold and silver definitely are the only investments right now that are even somewhat, attainable to an investor to even think about. See, the next chart underscores gold performance versus crude oil as seen through the lens of the IPATH GSCI crude oil total return index. So this chart is another feather in gold's cap. It shows not only the metal decisively outperforming oil, but it illustrates the extent to which deflationary undercurrents are being felt throughout the global economy. The mere threat of deflation is one of gold's strongest selling points. For when investors are worried about failing commodity prices, they typically flock towards gold as a hedge against deflation. So with the stench of deflation thick in the air right now, the demand for gold as a safety hedge is high indeed. So the only major area where gold's relative performance is lagging right now is its comparison with the U.S. Treasury bonds. Below is a ratio comparing the price of gold with the iShares 10 to 20 year Treasury bonds. So they're comparing gold to bonds because bonds looks like the only other thing that people could be looking at. So just a few weeks ago, gold was outperforming T-bonds in relative terms. However, the latest selling panic in equities sparked a massive move in treasuries, while gold suffered some liquidation pressure as investors indiscriminately sold anything they could to quickly raise cash. That cash grab. They were definitely looking at that. So it is interesting to see where gold sits compared to other investments or other options, that people could fall into. See, when gold falls along with everything else in selling panic, however, the selling pressure on gold tends to be short-lived. Once investors regain their wits and realize that they're threw the proverbial baby out the bathwater, they typically return to buying gold as safety demand. And that's true. I want to stop right there for a second because a lot of times people will panic sell gold, but they're very quick to realize, wait, gold is money. Gold is real money. Gold is the thing that I should be investing into, not selling it, because gold is money itself. So you're selling money to make more money, or you're selling your money to get money, and people quickly realize that's not the best solution. So then they start buying gold again. See, with gold trying to establish a bottom, which we might have seen now. Moreover, gold's performance versus treasuries is likely to show improvement in the coming weeks, but even consideration in relative weakness versus T-bonds right now, the metal is still outperforming two of the three major competitors, and that's enough to commend gold as an ideal safe haven asset to own in the coming months since the global economic outlook remains very uncertain. And that's very true because there's this unknown variable that's definitely eating people alive. It's the not knowing how, or to not knowing to what extent gold is going to, or where coronavirus is going to lead. How many more people are going to die from it? How many more people are going to get affected by it? And it really does scare people, and that unknown factor is what's driving the prices so wishy-washy, where people are like, should I be selling gold? Should I be buying gold? Should I be grabbing cash? Should I, and especially when you're quarantined, you have all this time to sit in your own mind at home because you're not doing anything, and then that catastrophic mind state just starts going faster and faster and faster, and it leads to undecisive or very irrational decision making. So anyways, on a side note, I've always found it comforting when Goldman Sachs agrees with my intermediate to longer term price outlook. This is due to high regard which I hold Goldman Sachs commodity chief Jeff Curry, as he set a very respectable record in forecasting gold's longer-term price trends. On that note, I was gratified to hear he has released his research, confirms investment 12-month price target at $1,800. So in summary, he's saying that Goldman Sachs is looking at $1,800 gold still in the next 12 months. So in summary, gold's intermediate term bullish outlook appears to be assured in view of its continued safety relative demand among investors, as well as its relative strength versus two of its three major competitors, namely equities and crude oil. Lingering worries over the impact of COVID-19 will have on the global economy should allow gold to maintain support above pivotal $1,450 level. So right now, gold is sitting at the $1,478 level, so they're saying that there's a very strong support line around that $1,450 level, and eventually boost gold prices to new multi-year highs later this year. Bullish longer-term investment positions in gold are therefore still warranted. So it's still looking very, very good, even though things are so bad right now in the economy. I think people are starting to realize that precious metals may be the answer, even though prices are still down dramatically. it does not mean that they are going to stay down. It doesn't mean they're going to keep going down. We see silver in the green right now, and this might be people starting to actually realize that silver needs to be outperforming gold to some extent because the gold to silver ratio was so exaggerated. We also see palladium up $58 to $1,720. Looks like it's pulling away from gold. And we also see platinum down to $599. So looks like the markets are all over the place right now, extremely wishy-washy. It's like a ping pong match, but it does look like the gold to silver ratio is starting to normalize to some extent, which I'm very interested to see. So anyways, I'm going to wrap this video up here. If you did enjoy this video, make sure to smash that like button. Also, make sure you subscribe if you're new because I do post daily videos. This was Silver Slayer. Thank you for tuning in. I'll see you guys soon. Peace.